Welcome back. You're tuned in to Bazaar Morning Call. You're on CNBC-TV18. If you're just joining in, then overnight the global cues were quite positive, and the SGX Nifty suggesting that we're going to be off the blocks in style. A 90-point uptake is what we're bracing for. But let's discuss a few stocks, and to help us out with that, we're joined by Dipan Mehta, Director at Elixir Equities. Hi, Dipan. Good morning. Dipan, let's start off with the banking name. Axis Bank, well, the NIMs came in at the highest we've seen in the last 30 quarters. How do you read these numbers and your preference from the banking space?
Good morning, Nigel, and thanks for having me on your show. I think excellent set of numbers coming through from Axis Bank, better than street expectation, and you cannot find a fault except that perhaps the deposit growth was at just 10%. And I think that's a key data point that we are monitoring for all the entire banking sector, because the next stress point is going to be raising of resources for lending. I think all the various other parameters like growth in credit, net interest margins, and NPA and other operating costs all within control and best ever. But the deposit growth seems to be lacking, and at some point in time in the future, that may tend to impact the overall growth in the loan book. But nonetheless, I think great set of numbers coming in from Axis Bank. It follows what we saw from a lot of other private sector banks, including ICICI, Kotak, HDFC, IndusInd Bank, IDFC First. I think we've been truly surprised by spectacular set of numbers from the banking sector.
Okay, spectacular set of numbers from the banking sector. Well, across the board, there have been, target prices have been raised for Axis Bank as well. I think one of the most aggressive on the street is MK. They've raised their target price to 1,300 on the stock. Apart from that, UBS, JP Morgan have raised it to 1,100 and Morgan Stanley is at 1,200. So, I take your point that nothing to really fault in these numbers. But since we're talking about very good set of numbers, one stock that saw a follow-on rally yesterday, Dipan, was Persistent Systems. I mean, it's had a super run ever since its earnings. Do you see more upsides here, considering that, these are stocks that are looking good from a valuation standpoint, given the fall we've seen recently?
Good morning, Sonia. See, this is what I've been trying to say, that when the crunch time comes, the boys get separated from the men. So we've seen what happened in Infosys versus rest of the pack. Their focus largely on winning large deals is helping them sail through. And when it comes to mid-cap IT, the focus of the companies on specific verticals, on specific clients, on specific practices or certain IP-led businesses, that is what is enabling them to continue their growth rates despite there being spending cuts all around. And you're going to find this trend increasingly going forward as well. One more name comes to mind, Coforge. I think they came with an excellent set of numbers and sustained growth rates over there as well. So you're going to find these 3 or 4 lovely nuggets in mid cap, 1 or 2 in large cap, which will continue to sustain growth rates in that 20 zone, and still, despite challenging environment, and still deliver those kind of growth rates. And that's where investors need to focus on. Mind you, these stocks will be expensive, but over the longer run, they will generate a higher return than rest of the IT pack.
Oh.
Right. Dipan, hi, good morning. Good to have you with us here. The one space on the other side yesterday was cement, right? Which completely got smashed. Of course, started with Ultratech's numbers, but Grasim, Shree Cements, Dalmia, India Cement, JK, anything between 4, 6, 7% cuts in the cement space. Your thoughts?
Yeah, Prashant, good morning. I see a long bear market for cement stocks, and there are structural changes which have taken place in the industry. Last 3-4 quarters, these companies haven't been able to pass on cost increases. There's massive buildup of capacity taking place over there, and that's going to lead to some amount of disappointment when it comes to price discipline. So I'd be very cautious when it comes to cement. There are so many other sectors which consume cement itself, which are looking far more exciting, like real estate, engineering, construction, infrastructure space. I think all of these need to be given preference over cement stocks.
I don't know if you track Arvind's smart spaces, but I would want you to listen into the conversation because it was a very good set of numbers that the company reported. In fact, it's the best ever quarterly sales in Q3. Its collections have also looked very strong. Kamal Singhal, who's the MD and CEO at Arvind Smart Spaces, joins us now.